Yes, students, now we will revise the topic of clubbing of income. And clubbing means not the one which other thinks about. That is dinchik, dinchik, dinchik. No, 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 sir. For us, clubbing means clubbing of income. That is, for someone else's income, we are so generous to pay tax to the income tax department or to the central government. And one thing you have to be careful, guys. Whenever clubbing get attracted, irrespective of the nature of income, it will always be clubbed with the income of an associate under the head income from other sources. And with respect to clubbing, the provisions are covered in section 60 to 65 of Income Tax Act. What is section 60 telling? We will see. Whenever an associate has received an income and then transferring it to others, it will always be taxable in the hands of transferor, guys. For example, assume you earned an income, you received it and later transferred it to me. For in whose hand it will be taxable, guys? You or me? It is you. Irrespective of the relationship between us, whether we are relative or not, doesn't matter. Income will be taxable in the hands of the person who has earned and received it, and not in the hands of the person for whom it is transferred, guys. Okay. So when are you going to transfer? Next, section 61. If there is a revocable transfer of an asset, then whatever income the person who has received the asset is generating from such asset will be clubbed in the hands of the transferor. First of all, sir, what is revocable transfer? Guys, revocable transfer means gaining the right back. For example, assume I have transferred my asset to you and I have told after 2 years or after 5 years, you have to transfer back the asset to me. Or else, I have transferred an asset to you with a condition that whatever income you are earning in that asset or from that asset, please transfer it to my family members. In that case, we term the transfer as revocable transfer. But clubbing will not be attracted as per section 62 in the given two cases. When is it? Clubbing will not attract if the transfer is not revocable during the lifetime of the transferee. For example, I have transferred my asset to a person telling if you die, then the property has to come back to me. So will this attract clubbing? No. Next, clubbing will not attract if there is a transfer of asset to a trust and not revocable during the lifetime of the beneficiary. For example, I have transferred my asset to a particular trust and I have put a condition telling if trust closed down, then the asset has to come back to me. Even in this case, clubbing will not be attracted, guys. Okay. Then section 64.1. Section 64.1 and 1A is very important in this chapter, guys. Oh, section 64 once talk about clubbing of spouse income or son's wife income, that is daughter-in-law. Okay, what is it? We will see one by one. Income of a spouse by way of salary, commission, or any remuneration, whether in cash or in kind, from a concern in which the other spouse has a substantial interest will be clubbed. But if the person who is earning the salary has any qualification, experience, knowledge, or skill, then clubbing will not be attracted. Clubbing will not be attracted, guys. So I will try to explain this with an example. Listen here. Assume wife has a substantial interest in X Limited. That means she is holding more than 20% of equity shares in X Limited. Okay. And when she purchased the shares before the marriage, after the marriage, it doesn't matter. Okay, sir. Fine. And in that company, that is X Limited, where wife is having substantial interest, husband is working and is getting a salary of 1 lakh rupees per month. And he doesn't have any qualification, experience, or skill, guys. Let us assume that is Abu Dhabi. Okay, sir. In that case, we will first compute what is the salary income of an husband, allowing all the exemptions and deduction, whatever is eligible for, including standard deduction under section 16 will be allowed. So we will calculate first taxable salary in the hands of husband, but it will be clubbed in the hands of wife, guys. As per section 64 subsection 1. Under which head, sir? As I already mentioned, clubbing will always be attracted under the head income from other sources. In the hands of whom here? Wife. Now you might ask me, sir, what if this husband has a qualification, is a qualified person, or he is having some experience or skill? In that case, clubbing will not be attracted. In that case, the income which the husband is earning by way of salary will be taxable in his hands. We have one more case, that is when both of them has a substantial interest, then what? Assume both Mr. A as well as Mrs. A has a substantial interest in A Limited. They both hold more than 20% equity share in a company. Assume they are a promoter or co-founders. and both of them are receiving salary from A Limited. Both of them are receiving salary from A Limited. Then we will see before clubbing whose total income is higher. Assume Mr. A has total income higher than Mrs. A. In that case, whatever salary income Mrs. A is earning from A Limited will be clubbed with Mr. A, guys. Will be clubbed with Mr. A. And here qualification, experience and all doesn't matter. Hope you understood. When both of them has a substantial interest in a company and if both of them are receiving salary from that company, then we will check whose total income is higher before clubbing. Before clubbing, who is having higher total income, and with them, the salary income of the other spouse will be clubbed. Will be clubbed, guys. Okay, sir. That is what the second point is, guys. Then coming to the third point, where an asset other than house property is transferred by an individual to his or her spouse without consideration or for inadequate consideration, that is for a lesser price. Income generated from such transferred asset attracts clubbing and will be taxable in the hands of transferor. This provision is applicable for an asset, any asset, but other than house property. Sir, why house property is excluded? Because for house property, we have learnt deemed ownership provision in section 27 under the head house property. So if house property is transferred to a spouse or minor child without consideration or for inadequate consideration, the transferor will be the deemed owner. And rental income will be taxable in the hands of whom? Transferor. Got it? This we have already learned in house property, guys. This also I will try to explain you. Yes, pay attention. Now, if there is any transfer of asset between spouse, that is husband to wife or wife to husband. Okay, for husband, wife will be the spouse, and for wife, husband. Okay. Without consideration or for inadequate consideration. If it is an house property, guys, we have already covered it. This is not a part of clubbing chapter. Please be careful. But still, I am connecting and I am explaining. In that case, as per section 27, the transferor will be the deemed owner. Accordingly, no clubbing. No clubbing, guys. Whereas if it is other asset, then whatever income the transferee, that is the receiver, is generating from that transferred asset will be taxable in the hands of whom? Transferor, as per section 64 subsection 1, guys. Oh, sir, what about the receiver? The receiver is a spouse. No. Will section 56 to 10 gift taxation be applicable for them? No, guys, because gift received from relative will not be taxable in the hands of recipient, irrespective of the value of the property. Yes, sir. Fine. So there are exceptions to this. When is it? Means in the following cases, clubbing will not be attracted, guys. In case the transfer is before marriage or in connection with an agreement to live apart, that is divorce, if the associate and his or spouse is divorced. So if an asset is transferred before marriage or after divorce, then the clubbing will not be attracted. Clubbing will not be attracted, guys. Okay. But if it is before marriage or even after marriage, when they are not relative, for the receiver, can section 56 to 10 be applicable? Yes. Yes, it can be applicable. Next, the income from the asset transferred shall not be included in the income of the transferor after the death of the spouse, either the transferor or transferee. If any one of the person has died, then clubbing will stop, guys. Where will you go and club? Can we go there and club? No, sir. So that is why if either of the person, that is either husband or wife, if one of them dies, then clubbing will stop. Okay, sir. Then fourth one, income arising on the transferred asset alone have to be clubbed. Whereas income earned by investing, such income arising from transferred asset cannot be clubbed. Means income on income will not be clubbed. For example, assume I gifted a debenture to my wife and she is earning 1 lakh interest income from that debenture. Is it clubbed with me? Yes. Now, with 1 lakh, my wife is not going for shopping. She is investing it somewhere else. And on that 1 lakh, she is earning, assume, 10,000 interest income. Will that also be clubbed with me? No. That 10,000, whatever she is earning on 1 lakh, will be taxable in the hands of the wife, guys. That is the person who is earning it. So income on income will not be clubbed. I also have one question on it. That is the first question in my question bank. You can just see here. I will quickly go through. Mr. Sharma invests 10 lakh in FD at a bank in his wife's name. Interest of 1 lakh arises on this income. Guys, will this be clubbed with Mr. Sharma? Yes. Whereas Mr. Sharma invests the interest on a periodic basis and interest for an amount of 5,000 arises on interest deposited by her in a bank. Means whatever interest she is earning, no, she is depositing it in the bank again and she is earning 5,000 income on that. Will this 5,000 be clubbed with Mr. Sharma, guys? No, no. It will be taxable in the hands of Mrs. Sharma. Hope you understood. Yes, sir. Next, let us march forward. Okay. So we saw if an asset is transferred to a spouse other than house property, the income earned on such transferred asset in the hands of the recipient will be clubbed with whom? In the income of the transferor. Okay. Sir, what if it is son's wife? Then it is given here. It is given here. Fifth point. Let us see. If the asset is transferred to son's wife without consideration or for inadequate consideration, then income generated from such transfer attracts clubbing and taxable in the hands of transferor, guys. So if father-in-law or mother-in-law transfer an asset to daughter-in-law, and from such transferred asset, whatever income the daughter-in-law, that is son's wife, is earning will be clubbed in the hands of the transferor, that is either father-in-law or mother-in-law. Son is okay, you can transfer it to son, but not son's wife. Okay, unfair, but still, that is how it is there in the law. Okay, sixth point I will cover it, but before that, seventh, where an individual transfers some assets directly or indirectly to a person or association of person without adequate consideration. Okay. For the immediate or deferred benefit of his or her spouse or son's wife, all such income as arises directly or indirectly from such assets shall be included in the income of whom? Transferor. Will be included in the income of the transferor. Sir, what is it? Okay, I will explain this and listen, people. Now, if an associate transfer an asset to spouse or son's wife, whatever income they are earning from that asset will be clubbed with associate. Yes. When it is transferred without consideration or for inadequate consideration. Okay, this we already saw. Now they are telling if associate, instead of directly transferring it to spouse or son's wife, if they transfer the asset to some third person, for some third person, let it be anyone, but for the benefit of whom? Spouse or son's wife. For example, assume I transferred my asset to my friend and I told whatever income you generate from this asset, no, give it to my spouse or give it to my son's wife. So if that is the case, then whatever income the third person is earning from that transferred asset will be clubbed with assessee, guys. Will be clubbed with assessee. So that means they have covered both direct transfer as well as indirect transfer, because here assessee is transferring the asset to a third party, but for whose benefit? Spouse or son's wife benefit. Clear? There is something called as cross transfer also, which we will take a little later. Okay, then coming to point number 6, guys. Now, if an associate has gifted a money to a wife or spouse, and if that amount is invested by the receiver in a business, and whatever income is earned on that amount, either in the form of profit or interest, will be clubbed in the hands of the transferor, guys. So, what is it? We will see. Where the asset transferred directly or indirectly by an individual to his spouse or son's wife, that is daughter-in-law, or invested by the transferee, that is transferee means receiver, in the business, proportionate income, not the entire income, proportionate income arising to the transferee from such investment is to be included in the total income of whom? Transferor. That means it will be clubbed. Okay. If the investment is in the nature of capital contribution, proportionate interest or proportionate profit receivable by the transferee will be clubbed with the income of the transferor by taking into account the value of aforesaid investment or capital as on the first day of the previous year to the total investment in the business. That means we need to take what ratio? Whatever is the amount of capital on the first day of our previous year. For us, it is 1st April 25, guys. 1st April 25. Got it? Yes. I will explain this with an example. Yes. Okay. Assume a wife gifted 5 lakh rupees to an husband. Okay. and husband is investing this money into a business. Assume this amount was gifted by wife to husband on or before 1st April 2025, and immediately husband has invested this money into the business. And on 1st April 2025, what is the total amount of capital in the business means 15 lakh. 15 lakh. Out of it, how much is the money gifted by wife? 5 lakh. Remaining 10 lakh, assume it is husband's contribution only. Okay, sir. And let us consider that husband earned a profit of 3 lakh from the business in the previous year 25-26. Now, out of this 3 lakh, how much will be clubbed with wife? We need to calculate. So, 3 lakh proportionate to the amount gifted by wife, how much is that? 3 lakh into 5 lakh amount gifted by wife divided by total capital in the business on 1st April of the previous year, guys. Okay, sir. So how much is that? 1 lakh. So profit to the extent of 1 lakh will be clubbed with wife, whereas remaining 2 lakh will be taxable in the hands of husband as business income. Hope you understood. Yes, sir. Sir, what if by chance, if if husband has suffered a loss from business? For example, wife gifted a money to husband and husband has suffered a loss from this income. Okay, that is from the whatever money he has invested in the business, he lost some money. He has suffered a loss in simple. So in that case, even to the extent of amount contributed by wife, the amount of loss will be clubbed with wife. For example, assume the loss suffered is 3 lakh only. The amount of loss suffered by husband in the business is 3 lakh during the previous year. To the extent of 1 lakh can be claimed by wife, and she can adjust it as if it is her loss, her business loss. Hope you got it. Yes. Sir, what if by chance, if this money is gifted on 10th April, sir? 10th April. Then in the current year, clubbing will not be attracted, only in the next year. Because on 1st April, money gifted by wife to the husband was not a part of capital, guys. Was not a part of capital. Because to check what amount has to be clubbed, we will always consider the capital on 1st April of the previous year. So if any money is gifted by spouse to another person, that is by wife to husband or from husband to wife, in between the year, for that year, no clubbing. But from next year, on the opening day, the total capital of the business, will it include the amount gifted also? Yes. So we need to consider that and calculate what is the amount of profit which will be clubbed with the hands of the transferor, guys. Hope you got it. Yes. I also have one question on this in my question bank. Let us see. Yeah. Vaibhav started a proprietary business on 1st April 2024 with a capital of 5 lakh. He incurred a loss of 2 lakh during the year 24-25, that is last year. To overcome the financial position, his wife, Mr. Vaishali, a software engineer, gave a gift of 5 lakh on 1st April 2025, which was immediately invested in the business by Vaibhav. Okay, immediately he has invested on 1st April itself. Okay. He earned a profit of 4 lakh rupees during the year 25-26. Okay, after wife gifted, he started making a profit. Compute the amount to be clubbed in the hands of Vaishali for the assessment year 26-27, guys. Okay. On 1st April 24, he had a capital of 5 lakh and later he suffered a loss, guys. He suffered a loss of 2 lakh. So on 1st April 2025, still how much money is left out of 5 lakh? 5 lakh minus 2 lakh, because loss means you will adjust, no? Yes. So after adjusting the loss, only 3 lakh capital is left. And wife gifted the money on 1st April itself, which he invested immediately. So add 5 lakh. So what is the capital of the business as on 1st April of the previous year? It is 8 lakh. And how much profit did the husband earned from the business in the current year? 4 lakh. So how much would be clubbed in the hands of wife, guys? Wife, how much did she gifted? 5 lakh. Okay. So out of 8 lakh, amount gifted by wife, which is invested in the business is 5 lakh. So 5 by 8 is the ratio, guys. Okay. So 4 lakh is the amount of profit into 5 by 8. We will get 2 lakh 50,000. So 2 lakh 50,000 will be clubbed in the hands of wife. Whereas remaining 1 lakh 50,000 will be taxable in the hands of husband, guys. Okay, sir. Then you might also ask me, sir, what if by chance, as I already explained, what if by chance, if this money is gifted in between the year, that is, assume she gifted 5 lakh on 1st May 2025. In that case, in the current year, clubbing provisions will not be attracted, whereas in the next year, it will be attracted. Got it? Yes, sir. Okay. Then there is also one more sub question here. If Vaishali gave the said amount as loan, what would be the amount to be clubbed? If it is given as a bona fide loan, guys, then clubbing will not be attracted. Clubbing provisions will not be attracted. And in this case, for the receiver, will section 56 to 10 be applicable, sir? No, no, because as husband and wife is a relative, amount received or gift received from relative will not be taxable as per section 56 to 10, irrespective of the value or irrespective of the amount of money, guys. Got it? Yes, sir. Next, so we are done everything with respect to section 64 subsection 1, guys. Spouse or son's wife. Next, junior. Section 64 1A talks about the clubbing of income of a minor child. Guys, please listen here. Listen here. Now, if there is any minor child who is earning income without their efforts, without their skill or talent, then the income earned by the minor child will be clubbed with the parents. Sir, father or mother? Father or mother, whoever is having higher income before clubbing. And once the income is clubbed with, assume, with mother, it will continue to be clubbed with mother unless the assessing officer feels that change is required. Clear? I repeat, whenever minor child is earning any income, we need to check whether they are earning out of their skill, talent, or knowledge. If yes, no clubbing. In that case, it will be taxable in the hands of minor child only, but parent will act as a guardian. Okay. So no clubbing in that case. Whereas if a minor child is earning any income without their skill, knowledge, talent, in that case, it will be clubbed with father or mother, whoever is having higher income before clubbing. And whenever the income of a minor child is clubbed with father or mother, with whomever it is clubbed, that parent can claim exemption under section 1032, guys. 1032. How much, sir? The actual amount clubbed are 1500 per child, not per month, per child per annum, whichever is lower. Actual amount clubbed are 1500, means maximum is 1500, not flat. Okay, sir. But this exemption is not available if a parent with whom the minor child income is clubbed, no, if that parent is following default scheme under section 115 BAC, then that exemption is also not available. Only clubbing, no exemption. And easy to remember this, guys. See, section 64 subsection 1A. 64 1, first relative is who? Spouse. That is covered. Next junior, 1A is minor child. And there is a government policy, V2 our 2. Correct? So if you just divide 64 by 2, you will get 32. So whenever there is a clubbing of minor child's income as per section 64 1A, immediately exemption under section 1032 would be available. Okay, so 64 by 2, you will get 32. You can remember like that. But sir, assume assessee has 5 minor child and all of them are earning income without their efforts. Will everything be clubbed? Yes, it will be clubbed. I am just giving an example of V2 over 2. That is a government policy. Okay, just to remember this section, guys. Okay. Next, I will just try to explain this with few examples. Assume, guys, assessee has 3 children, C1, C2, C3, and income which is clubbed with respect to each child is 1000, 5000, 10,000. So how much exemption an assessee can claim? Assume the parent is following optional scheme. Okay, so assume the income is clubbed with father. So father is following optional scheme, is not following default scheme. So that means how much exemption he can claim under section 1032, guys. For C1 only 1000. That is 1000 or 1500, whichever is lower, 1000. Then for C2, 5000 or 1500, whichever is lower, 1500. For C3, 10,000 or 1500, whichever is lower, 1500. Remaining income will be clubbed with father. Got it? Why I am giving this example is, student, when they think that, oh, the income of 3 children are clubbed, they will straight away give exemption of 4500. That is 1500 into 3. No, no, no. Please check for each individual child how much is the income clubbed and accordingly decide what is the amount of exemption, guys. Got it? Yes. Now what, sir, what if father is following default scheme? Assume the income of the minor child is clubbed with father and father is following default scheme. Then exemption under section 1032 is not at all available. Entire amount will be clubbed, guys. Hope you got it. Yes, sir. Then, then please listen now. If a minor child is earning any income, assume from a special talent or from his own knowledge, then it will not be clubbed in the income of a parent. But if that money is invested and if they are earning any interest or dividend or any other income out of it, will that be clubbed? Yes. For example, please pay attention. This is important. They will test you in the questions. Assume a minor child has earned 1 lakh rupees from a special talent. Will this 1 lakh be taxable in the hands of minor child or parent? Minor child only, because it is because of talent. Okay. But assume the minor child invested this money in FD and they are earning an income of interest income of 10,000. Where it will be taxable? With parent or minor child? With parent. Clubbing will be attracted because this 10,000 is not earned by them from their talent or knowledge. Will it be clubbed? Yes, guys. No matter how they got 1 lakh and all, doesn't matter, still it will be clubbed because many a times what happens, no, assume someone gifted income or someone gifted money to a minor child and that money is invested in FD and they are earning interest income. Will that be clubbed? Yes. But parent didn't give the gift, sir. No problem. Any income which a minor child is earning without their efforts or talent, then it will always be clubbed with the income of a parent who has higher income, guys. Even if by chance, if a minor child is physically challenged, even in that case, no clubbing, guys. No clubbing. Okay, sir. Fine. One important clarification which I would like to give connecting to house property head also, guys. So please pay attention. This is connected to house property, but still somewhere important even for clubbing part. Yes. Now assume father or mother gifted house property to a minor child who is not a minor married daughter. Let us assume it is not a minor married daughter. In that case, will it be clubbed? No, no. As per section 27, deemed ownership will be applicable. The father or mother who transferred the asset or house property will be deemed to be the owner, and the income from that asset which the minor child is earning will be taxable in the hands of the transferor. Under which head? Under the head house property only. Under the head house property, because the transferor will be deemed to be the owner. And accordingly, clubbing will not be attracted. And can a parent claim exemption under section 1032? No, no, no. When there is no clubbing, there is no exemption under section 1032, guys. Okay. Next, sir, what if a child is minor married daughter? So father or mother gifted an house property to a married minor daughter. In that case, deemed ownership will not be applicable under section 27. That means if married minor daughter is earning any income from that house property, it will be clubbed with the transferor, that is father or mother. And in that case, assume the income is clubbed with father. Can father claim exemption under section 1032? Yes, guys. He can claim provided he is following optional scheme. Hope you understood. So exemption under section 1032 will be available only when income of minor child is clubbed. When there is no clubbing of the minor child income, then there is no question of claiming exemption under section 1032, guys. Okay, sir. Fine. Next, let us move to section 64 subsection 2, income of HUF. Guys, now let me explain the provision with this example. Assume there is a member. I am a member of HUF. I am transferring my personal asset to an HUF without consideration or for inadequate consideration. Okay, that means now the asset is owned by HUF. So as HUF received the asset from me free of cost or for inadequate consideration, is section 56 to 10 applicable for the recipient? No, no, because the member and HUF is a relative, guys. Hence, it is not taxable in the hands of HUF. But whatever income the HUF is earning from this asset transferred by member, it will be clubbed in the hands of member as per section 64 subsection 2. Okay. And here there is no exemption. Please be careful. Only for clubbing of minor child income, exemption is available. Whereas for other income, there is no exemption. Okay. Fine. This is first thing. Next, if member transfer his personal asset to HUF and HUF later got partition, And whatever asset is owned by HUF, they are distributing it to their members. And whatever asset the member gave it to HUF, no, now HUF is distributing it to his spouse. That is the member who originally transferred the asset, no, for their spouse. So it is like an indirect transfer. So they're telling whatever income after HUF got partition, and on partition, whatever asset or income is distributed by HUF to their members. If it is an asset, is it a transfer? No. Should we compute capital gains? No, because it is covered in section 47, guys. Hope you remember. We discussed this. I repeat. When HUF get partition, if any asset is distributed by HUF to their members, any members, is it a transfer? No. Should we compute capital gains? No. As per section 47. Okay, but the member whoever has received it, if they sell it in the future, we need to compute capital gains. And in that case, the period of holding will include both the period of holding of the member as well as HUF. And also the cost will be the cost of acquisition to the previous owner. That is the cost to the HUF. This is a provision covered in capital gains head. Okay. Now coming back to clubbing. Now I repeat, please listen. Member transferred his asset to an HUF. Now HUF is getting partition. Whatever asset the member gave to HUF, they are giving it to their spouse now as a partition, as a share. In that case, whatever income the member spouse will earn from an asset will be clubbed in the hands of the member who originally transferred it. Clear? Because it is an indirect transfer, guys. If the member directly transfer the asset to the spouse, then it will be clubbed as per section 64(1). So what he planned is, let me transfer it to HUF, let us divide the HUF, and that property will go to the spouse. So they tried to give the benefit indirectly. Will clubbing get attracted even in that case? Yes, it will be attracted. Got it? Yes, sir. And easy to remember, guys. So with respect to HUF and members, the provisions are covered in section 64 subsection 2. Correct? No? Yes. And for an HUF, at least 2 members has to be there, no? For family? Yes. Okay, sir. And please listen. If HUF distribute a share of income or share of profit to their members, it is always exempt, guys. On that, clubbing and all will not be attracted. I repeat. If HUF, after earning the income, after paying the tax, if they distribute the income to their members, that share of income what a member will receive from HUF will be exempt in the hands of the member. Okay. Then other points on clubbing. Income from asset transferred is clubbed and not income on income, which I already explained. If I have transferred a debenture to my spouse and if she is earning 1 lakh from that, then that will be clubbed with me. 1 lakh will be clubbed. And if she is reinvesting that 1 lakh and if she is earning, assume 8,000 from it, that 8,000 will not be clubbed in my hands. It will be taxable in the hands of my wife. Okay. And we already learned that if an asset is transferred by husband to wife or wife to husband, whatever income the receiver is earning from that asset, it will be clubbed with the transferor. Sir, what if receiver sell that asset? Then we need to compute capital gains, income in the hands of the transferee, and the same will be clubbed in the hands of whom? Transferor. And the same will be clubbed in the hands of transferor, guys. Okay, sir. Then in case of clubbing of income of a spouse, the marriage shall subsist both at the time of transfer as well as at the time of earning the income. And the moment the couple get divorced, the clubbing will stop. The clubbing will stop, guys. Then income for clubbing purposes include losses. So if by chance if transferee or the receiver has suffered any loss, will that also be clubbed in the hands of the transferor? Yes. And they can claim it as if it is a loss suffered by them and adjust it. Then coming to the cross transfer. So this is like an indirect benefit or indirect transfer made, guys. What is it? The Supreme Court in a case of CIT versus Keshavji Murarji in the year 1967, CIT means the Commissioner of Income Tax, guys, observed that if two transactions are interconnected and are parts of same transaction in such a way that it can be said that the circuitous method means indirect way, was adopted as a device to evade the tax, okay, for tax evasion, the implication of clubbing provision would be attracted. I will try to explain this with an example. This we call it as cross transfer, guys. Now, see, if a spouse transfer money or asset directly to another person, that is wife to husband or husband to wife, clubbing will be attracted. So they planned two separate transaction. What is it? Mr. A and Mr. B planned a transaction where Mr. A will gift a money to Mrs. B and Mr. B will give the money to Mrs. A. So they are exchanging the gift. Hello, hear me properly. They are exchanging the gift. Okay. So in that case, whatever is the amount of common gift to the extent of common gift. Okay, let me explain with a number. Mr. A gifted 8 lakh to Mrs. B and Mr. B gifted 10 lakh to Mrs. A. So to the extent of common amount, how much is that? 8 lakh. So whatever income is earned on 8 lakh will be taxable in the hands of the respective husband, guys. That is, whatever Mrs. A will earn on 8 lakh will be clubbed with Mr. A. At the same time, whatever income Mrs. B will earn on 8 lakh will be clubbed with Mr. B as cross transfer. Got it? Yes, sir. Fine. And see, you guys, that is husband and wife in the future, not now, okay, has to carry the tax burden together. Okay. And you can see here, you can you here like how I have given in the image, you guys also spend a good time with your partner and family members, that is children, but in the future. So now your focus should be on the studies, guys. You will get everything at the right time. As of now, guys, don't go in search of anything. Please make sure you focus on your studies and everything is awaiting for you guys in the future. And trust me, you will have the best days of your life in the coming days. And till now, what all sections we have covered, we'll just mark in this chapter 60 to 65. Yes, heads of income is already done. Yes. Then coming to clubbing, which is covered in section 60 to 65. Actually, 65 is not a part of your syllabus, but what is covered in 65 is, assume my wife income is clubbed with me. Will it be again taxable in her hands? No. When income is clubbed with the other person, that person who has earned it need not pay tax again on it because it will lead to double taxation. So that is all about clubbing of income, guys.